Hi guys, good morning. Welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's expiry day, brace for a lot of volatility, and of course there's news flow on the tariff front as well. It's not just talk from Trump now, it's also translating into action, given the fact that he has announced a 25% tariff on auto imports. Of course, there has been a fair bit of reaction across the globe. You've seen auto stocks tumble in the United States as well as Europe. In fact, even across the Asian markets, auto stocks are on the back foot. And here back home in India, we are expected to see auto stocks, react to this bit of news. Of course, there could be a sentimental impact, and we will be decoding what this really means for Indian automakers and auto part makers like, Tata Motors and Bharat, not Bharat, Motherson Sumi, and a lot of other names. Of course, we'll be getting you expert voices on how this really impacts Indian stocks. But of course, since I was mentioning it is expiry day, 23,300, crucial support level for Nifty on the downside. Yesterday, we snapped out of a 7-day uptrend. In fact, 23,500, that's the level that, we managed to hold on to. But let's see what happens when we start trade at 9:15 a.m. In the pre-open, we did break below that 23,300 mark, but right now it's around the 23,400 mark when it comes to the Nifty. But yes, lots of stocks in focus. Of course, your stock related queries will also be on our radar. Keep them coming in. We'll try and take them up with our experts on the show. But before we move any further, let's quickly take a look at the top stories at this hour. Wall Street snaps gaining streak amid escalating trade wars. Dow ends over 1,000 points lower while the S&P 500 drops over 1%. The 10-year Treasury yield ends at 1-month high. President Trump announces 25% tariff on all cars not made in the United States. Asian markets reflect Wall Street moves and trade in the red. The GIFT Nifty is also implying a lower start for our markets. Oil prices continue to rise on the back of mounting concerns about tighter global supply following the US threat of tariffs on countries buying Venezuelan crude. Meanwhile, gold prices ease as the dollar and US bond yields tick higher. Ongoing trade talks between India and the US are going well even as Trump's tariff threat looms. Sources have told CNBC TV 18 that the Indian industry is seeking an early bilateral trade agreement before the 2nd of April. All right, quickly take you through the top story then. US President Donald Trump has unveiled new tariffs on auto imports. The action came ahead of a broad range of additional levies expected to be revealed next week on the 2nd of April. Trump has said that these tariffs will likely be more lenient than reciprocal tariffs. But, we'll have to really see because every day there seems to be one headline coming out of the United States and there's a lot of confusion as to how one should really navigate, all these comments. But of course, there has been action as well, not just words, given the fact that auto tariffs have become a reality now, and they will continue for the next 4 years for the entire term of Donald Trump. In fact, Trump has claimed that his new trade measure is permanent, will continue to spur growth in tax revenues and bring back manufacturing jobs to the US. Canada and Europe have criticized the latest tariff escalation, and UK's industry body has warned that Trump's tariffs would hurt both American and British businesses and consumers. Well, that was about, the tariff and trade war escalation, but let's take a look at the cues for trade then. It's expiry day, and we snapped out of a 7-day gaining streak. Of course, ahead of the April 2nd tariff deadline, there is a lot of caution. Markets are on tenterhooks. We've seen a great rally in the last 7 days, but of course, caution reigning supreme now. 40 out of 50 Nifty stocks ended in the red yesterday. Most of the sectoral indices ended with cuts. Energy and realty were the top laggards. IT, in fact, went back, in the sell-off mode. We did see some bit of gains or buying coming in over the last or previous 2 sessions, but yesterday once again IT succumbed to selling pressure. So was the case with PSU names. So we had NTPC, BPCL; those were among the top Nifty laggards. IndusInd Bank, however, managed to snap out of its losing streak. Advance decline ratio was 1:4 on the NSE. Breadth has worsened, but some bit of changes on the Nifty. Zomato and Jio Financial will be entering Nifty from today, and Britannia and BPCL will be exiting the Nifty 50 index from today. And Zomato and Jio Financials, Financial are said to see inflows of up to $400 million as a result of this index rejig. Put call ratio fell to 0.92 vis-a-vis 1.04 in the previous session. And if you look at the FNO ban list, there is a new entrant, Hindustan Copper. But IndusInd Bank has come out of FNO ban. Yesterday, it saw some bit of gains. Of course, it was among the gainers in a weak market. Today, let's see where the stock opens. But FIIs remain net buyers. Good news in terms of fund flows. 2,240 crore rupees worth of stocks bought in the cash market. DIIs, however, were sellers, but to the tune of just about 700 crore rupees or thereabouts in the cash market. But let's bring on board our guest for today. Then joining me is Chandan Taparia, Senior Vice President, Head Derivatives and Technical Research at Motilal Oswal. Chandan, good up move over the last few sessions, 7 sessions so to say, but we've snapped out of that and there's negative news flow now, of course, in terms of tariff, and we are approaching the April 2nd deadline as well. 23,300, that is being pegged as an important support level for the index. Do you see that level being broken down today, given the fact that it's monthly expiry?
Good morning, Nandita. Thanks for having me. So, market has negated the high rise, high lows of last 6-7 trading session after breaking 22,600 zone on the last trading session. Even on last day, it drifted to 23,450 and now even opening lower. So, it negated the formation. Because of that, some upside could be kept. If I look at the expiry scenario, on expiry or to expiry basis, the index is up by around 4% and trading higher than its volume weighted average. But at the same time, trading lower than its weekly volume weighted average. So there will be tussle between bulls and bears. Because of the monthly VWAP, market will find support at lower zone. But because of the weekly VWAP, market will find the hurdle at the upside. So because of that, upside could be kept, and we need to look at the 23,333 zone. So I believe that level could be respected, but at the same time, hurdle will shift from 23,850 to 23,650. So now the probable trading range could be around 23,333 to 23,650 kind of level. But one need to keep in mind that weekly setup was slightly positive, but daily setup has taken a pause in positive momentum. So because of that, some decline could be there, but again, support based buy could be there near 23,333 marks.
Okay, if you look at the March series, we are poised to break the losing streak. I think for the March series, the Nifty is up somewhere around 4% or thereabouts. But talking about the Nifty Bank Index, it has staged a very good comeback, right? 4,000 points, so to say, from the recent lows. We've seen a breather on the Nifty Bank Index as well over the last couple of sessions. But here, what would your strategy be? Would you expect some bit of buying coming in now?
So in last 10 trading sessions, the Bank Nifty has seen a decent up move from 47,700 to 52,000. It managed to surpass a key barrier of 50,000 marks, but again on last trading session it negated the high rise, high lows. This index has outperformed the Nifty as up by around 4.8% or 5% on expiry to expiry basis, trading higher than the monthly VWAP but slightly lower than the weekly VWAP. But I believe some support based buying could be there, and 50,750 could act as an immediate intraday support for this index. But need to keep in mind that 2nd April could be a key trigger for Indian markets, and because of that, both indices could swing in between a broad trading range, and we need to closely watch key levels or need to keep the position light according to the market setup.
What would you do with autos? Auto as a pack hasn't really participated in this leg of the up move. And now with this tariff news coming in, how would you navigate some of these auto names, especially the likes of Tata Motors that have already seen quite a bit of a sell-off? Also auto part makers, the likes of Motherson Sumi, Bharat Forge, Sona BLW. How do you navigate?
So I'll avoid auto or Nifty auto index as of now, because market has recovered by 1900 points, but no major recovery was in the Nifty auto. In fact, index itself failed to surpass its 50-day exponential moving average, and now sell-on bounce could be there. Now looking at the Tata Motors, it witnessed a decent recovery from 600 to 720, but multiple hurdles are visible at 735, and it is not finding sustained buying interest at higher level. So I believe some supply could be there in the Tata Motors. And if you look at the Motherson Samvardhan, bounce already seen in the counter, but again hurdles are there, so I believe it can go down to 125. So I'll avoid Nifty auto, and in fact both these counter could see some profit booking from higher levels.
Okay, avoid autos. Of course, if there is a bounce, they could see profit booking at higher levels. But talking about IT as well, we saw good traction for 2 sessions, and then yesterday, IT pack was back in the throes of selling. But of course, there is news flow around Wipro in particular. It has okay. We'll come back to that. I think just about 20 seconds to go for the markets to open. Just want to see what the market is really doing, or how it's really poised to open. 50 points kind of a cut on the Nifty that could be expected at open. The mid cap index, of course, has been witnessing pressure over the last 2 sessions. So today it is expected to move in tandem with the rest of the market. Of course, first ticks coming in, and yes, it is a 60 odd point cut on the index. No big cut as of now, but we'll have to see how things really pan out. Sensex down about 130 points or thereabouts. The Nifty Bank Index as well extending weakness. A 40 point cut there. Looking at the advance decline ratio, 574 advances to 1000 declines. So it is tilted in favor of losers. But let's see what the auto pack is doing. Just want to see the impact of the tariff move on autos in the United States. As I was mentioning, auto has been sitting out of this up move. It's a 1.5% cut on the auto pack as we speak. Top sectoral laggard, no surprises there. Aside of that, you have IT that's down 0.5%, metals down 0.5%, pharma down 0.5%. So yes, all round weakness barring the FMCG pack, which is mildly in the positive zone. Of course, in tandem with what the global markets were suggesting, we have seen a fairly muted open, but the cuts aren't all that deep. We'll really see how we behave for the rest of the day, it being the monthly expiry day. But let's take a look at the top movers on the index. Then I want to just see what which stocks are really lagging behind. Yes, it is Tata Motors. A fair bit of exposure to US market, with respect to JLR, 6% down on Tata Motors as we speak. Top Nifty laggard, Eicher Motors as well, 1.5%. Bajaj Auto, 1.5%. M&M down 1%. So yes, the entire auto pack is feeling the pinch. You have IndusInd Bank that's back in the red. It's out of F&O ban, but the stock is down 2% among the top Nifty laggards. Aside of that, you had Asian Paints. Even pharma names are under pressure. Remember, Trump had threatened tariffs on pharma as well. So after the auto tariff move, pharma stocks also are on tenterhooks now, that perhaps this sector could be next that could be staring at tariffs. So Dr. Reddy's among laggards, 1% down. Aside of that, you have HCL Tech, Sun Pharma, Kotak Bank. These are some of the other laggards. But in terms of gainers, you have Wipro. Of course, it has bagged a 10-year deal worth $650 million. Reacting to that, defying the weakness in the rest of the IT pack. L&T is a gainer. Of course, has been seen steady order wins. Trent is a Macquarie report. It has initiated coverage with an overweight rating. Trent is up 1% or so in a weak market. Power Grid, HDFC Life, and even Reliance Industries is among the gainers, providing some support given the fact that we are still around that 23,450 mark despite sharp cuts in some of the auto names. But we were talking about auto anyway, but look at the move on Tata Motors, a 6.5% cut. Chandan, any fresh thoughts on this looking at today's open?
So Tata Motors I'll avoid as of now because on the weekly chart, we are witnessing an early sign of the bearish engulfing. It negated the high rise high lows and fell to hold above 50-day exponential moving average. So let it go down till 650, 645, then only the fresh thought can be applied here.
Okay, that's the view then on Tata Motors. What about Wipro? It has bagged a $650 million 10-year deal from UK-based Phoenix Group. Of course, IT stocks have been under pressure. Various reasons for that, even a possible delay in consumer discretionary spend and, translating into earnings pain. These were some of the factors that were weighing down. But last, few days, we did see some bit of buying traction in some of these IT names. On a Wipro in particular, what would you do at 270 rupees?
So Wipro has not performed in last 5-7 days when market has recovered well. In fact, the Nifty IT didn't do well. But now the way it is holding and not falling at the time of market corrective move, some sort of buying interest could be there. As of now, the hurdle is near 274, 275. Above that, buying could be there. However, on the weekly scale, in the last week, it formed a dozy sort of candle. But in last 2 days, small bodied candle indicates the absence is missing. The absence of momentum is missing. So I believe with support of 266, one can look at the position, but conviction will only come beyond 275 marks.
Okay, that's the view then on a Wipro. But JB Chemicals is another stock. KKR was to sell up to 10% stake for 2,576 crore rupees via a block deal. Offer price was at 1,625, almost a 5% discount to yesterday's close price. In fact, the block deal has taken place. 6% equity changed hands via block deal. The stock is of course down somewhere around 6.5% or thereabouts. Last 1 month we've seen the stock give slight positive returns, but if you look at the YTD basis, stock has shaved off 15% or thereabouts. Coming off 52-week lows, would you say that today's move could be viewed as a fresh breakdown, or would you say that it's just a news-based reaction on the stock?
So like it witnessed a decent recovery from 1430 to 1747, 1750, but again negated the low rise, lower low. So let it settle. It would be very tough to look at the bargain buying after the negation of high rise, high lows, because broader market may hold, but mid cap and small cap may take the cues as per their price pattern. So I believe let it correct till 1550 or 1525 for the bargain buy position.
Okay, that's the view then on JB Chemicals. But there's another stock that has seen a block deal, that's Max Financial. Stock is up 2.5%. There was a large trade. Just want to see 1.5% equity worth 569 crore rupees changed hands at 1112 rupees per share. Good traction in today's session, last 5 sessions as well. It has been doing well. 1 month gains are in excess of 10%. Would you be riding this wave on Max Financial?
Yeah, so slightly positive on the MFSL Max Financial. After the corrective move of last 2 days, it managed to hold 1110 and recovering well, forming a bullish candle. In fact, the weekly chart indicates some sort of support base of buying. So I believe one can apply the support of 1120, and it has potential to bounce towards 1175, 1180.
Okay, 1175, 1180, crucial level to watch out for on a Max Financial. But let's shift focus to viewer queries then. Naveen has written in and he wants to know at what level should he enter a Shriram Finance. Hasn't really mentioned a time horizon, but this stock has been doing well in tandem with other BFSI names. Last 1 month we've seen 11% up move, and even on a YTD basis the stock has gained somewhere around 16% or thereabouts. Would you expect the stock to make a dash at that 52-week high of 730, not very far away from that level? Could that happen in the next couple of months?
Yeah, I think the stock can see some recovery, and it has been consolidating in a range with multiple support at 660. So I believe 660 can be applied as a support, and it can head to a 770.
Okay, that's the view then. But let's shift focus on a query on Trent. Now, Trent, has been doing well in the last few sessions. If you look at the last 5-day performance, it has gained somewhere around 3%. But the stock, of course, has seen a fair bit of correction from its 52-week high. Today, we have a Macquarie report. They have initiated coverage with an overweight rating, outperform rating rather, and the target price is at 7,000 rupees. Would you consider buying a Trent now after the kind of correction it has seen? Is the risk reward looking better now compared to earlier when it was witnessing a very strong rally?
So yes, Trent has bottomed out, and now we are witnessing a consolidation breakout of last 28 trading session. It is approaching to its 50-day exponential moving average, and I believe small follow-up can take it to higher levels. But one need to keep in mind that momentum was very slow at the time of market recovery. And now the breakout is happening, but that breakout also required the hold of the broader indices. So 50 to 50 can be applied as a support, and upside if manages to hold the current zone, then it can head towards 5550 to 5600 level.
Okay, 55 to 5600 level. You can watch out for these levels as the near-term target on this particular stock. But let's talk about Castrol India. There's a query coming in on this particular counter from Satya CK. Wants to know the next major support level for short to medium term. The stock is up somewhere around 1% right now. But looking at the last 1 month performance, it has seen a 5% kind of a cut. On a YTD basis, however, we are seeing positive returns. What are the next support levels to watch out for here? It is holding on to the 200 level, 225, 28 kind of levels. So how would you really approach this? If it does slip below 200, what are the next support levels to watch out for here?
So it witnessed a 25% corrective move from the top of 251 in last 14-15 days. But at the same time, 200 could act as a major support. So I believe one should apply the support near 200 to witness a recovery towards 225 to 28.
Okay, 225, 228. That's crucial level to watch out for. Another stock that has been in focus is Ashok Leyland. Okay, there were reports, in fact, that they are looking to acquire SML Isuzu stake, but of course the company has denied these reports. The stock has been in focus nevertheless. Any thoughts on Ashok Leyland in particular? Amarendra Kamath wants to know your view on this particular stock. Hasn't really sent in a question, but would it be a buy at current levels? And if somebody is already holding on to this stock, what should the strategy be?
So if you look at the Ashok Leyland, Nifty Auto has not performed and Ashok Leyland got stuck in a range. If I look at the price behavior of last almost 10 weeks, multiple supports are seen near 193 but hurdle at 225. If I look at the lower time frame, supports are visible at 200, but at the same time the hurdles are seen at 220. So this is the broader range. I believe one need to look at the support of 205 for intraday point of view, but need to keep in mind that views and trend is not clear. We have to play the broader range between 205 to 220.
Okay. That was the broad range on an Ashok Leyland. Hope that answers your query. The next query is coming in on a BASF from Debu K. Any thoughts on this stock? Because the stock is around that 4420 level. It's halved from its 52-week high. How would you navigate this, and what are the levels to watch out for here?
So looking at the BASF, I think the momentum is missing. I don't think some sort of recovery could be seen. Volume is very less, so I don't want to comment here. But the broader range is 4150 to 4650.
Okay, that's the broader range. I hope that answers your query. The next one's coming in from Satvika Ranganathan. Wants to know your thoughts on Sterling and Wilson, and she has a very long-term time horizon, 5-year or so. The stock did see a fair bit of correction. Today's session, of course, it's down 1% or so, but in the last 6 months, it has shaved off over 60%, and even for the year so far, it's down almost 50%. Is it a good time to take a position here with a 5-year time horizon? Because it has come off quite significantly from its highs.
If someone is looking for immediate point of view, then my view will be avoid. But if someone is looking beyond 2 years, then yes, he can go for buying interest. Major support will be 230 for target of 300, 320. But again, very positional view with the view that if the stock price declines, he is ready to do the averages.
Okay, that's the view for the long term. It is looking good. But let's talk about a Nalco then. There's a query that has come in from Yogesh Kumar, and he wants your thoughts on Nalco for the short term. He's holding the stock at 186 rupees. The stock is somewhere around 180. Mild losses here, but should he hang on to it?
So yes, Nalco, I think one can look at, but multiple supports are there near 173. Momentum is missing. Nalco has not performed in the recent recovery. So again, tricky question, not finding the interesting price pattern. But at the same time, 173 can be utilized as a major support. If 173 is broken, then my advice is to avoid the counter.
Okay, avoid. That's the view on a Nalco. But I want to talk about an SBI card. The stock has been witnessing good traction, in fact, very close to 52-week highs now. Praveena wants your thoughts on this particular stock. On a YTD basis, the stock is up somewhere around 30, almost 30% or so. At one point in time, the stock was, witnessing selling pressure, but in the last 1 year return, 26% or so, it has done fairly well. How much of an upside do you see from here? Because it's already very close to its 52-week high. Would you see levels of 1,000 or so in the near future?
So SBI card looks good. In fact, on the lower time frame, some sort of consolidative breakout is visible. However, it has not done major move in last 5 years. But again, in this year, it rallied by 30%. We have witnessed a decent recovery from 665 to 869, 870 zone and holding the higher marks. So positive bias could be there. Support will be at 850. Upside could be 910.
Okay, that's the view. I hope that answers your query, Praveena. But the next query then, and the last one, is coming in from Alex. He wants your thoughts on HG Infra. The stock has been witnessing good traction over the last 1 month, although on a YTD basis, it is still down 27%. Even today, good traction, almost a 5% uptick at almost 1100. Would you look at this stock?
So looking at SG Infra, again, very mid-cap name, volumes are very less. But yes, after the decline of last 19 months, support-based buying is visible near 930, 950 zone. After the decline of last 3 days, some recovery is visible. So we have to be very cautious in terms of taking aggressive position. But yes, if he wants to hold, then with support of 160, look for a recovery towards 1150 levels.
Okay, look for recovery to 1150 levels, but the stock has been witnessing good traction. But before I let you go, Chandan, your recommendations for our viewers?
So first it will be buy on HAL, defense name buying is visible. It managed to hold support zone yesterday when the market was falling down. So with support of 30, with support of 4080, one can look for an upside target towards 4400. So HL will be first preferred idea in this market scenario with the view that the CPSC counter can do well. Other name, I need to look at the counter like SBI card or can look at the stock like Chambal fertilizer. So major trend of the Chambal is positive. However, the momentum is going slow and steady, but on the weekly chart, it looks quite promising for next leg of rally. So with support of 610, Chambal can head to a 640 kind of level. So HAL and Chambal fertilizer, these two will be preferred idea, and support for Nifty will be at 23,333 and Bank Nifty at 51,000.
Okay, those are the levels to watch out for on the indices, and two stock recommendations coming in from Chandan. With that, Chandan, would like to thank you for taking out time and joining in. As always, it's a pleasure chatting with you, and thanks for helping our viewers navigate their stock positions as well.
Thank you so much.
Thank you. On that note, before I bring on board my next guest, I want to just take a look at the market. I mean, we have recovered from the opening lows. In fact, now the Nifty is back above that 23,500 mark, very close to 23,550. So, no knee-jerk reaction to the auto tariff news. We have recovered well. Even the mid-cap index is off its opening lows, and the Nifty Bank index as well is inching towards the 51,500 mark. So yes, we have digested the tariff news for now, but remember it is expiry day, so some bit of volatility going ahead cannot be ruled out. But on that note, let me bring on board our next guest. Joining me is Feroze Azeez, Deputy CEO, Anand Rathi Wealth. Feroze, hi, lovely chatting with you. Lovely to have you on the show. The sentiment has turned since we spoke the last time. We saw a very smart rally and recovery from lows coming in. Of course, there are bumps on the way. This auto tariff news, it was expected to spur some bit of a sell-off after yesterday's weakness, but we've digested it pretty well. Looks like it at the current juncture, because even the mid-cap index has edged back into the green. Do you think the worst on the global front has already been priced in the kind of sell-off that we had seen a week back? Or would you say that there would be still some more hiccups to come as we step into the April 2 deadline?
Good morning. It's always a pleasure to talk with you, Nandita. Like you said, the markets have absorbed this surprise reasonably well, as we see today. Even the broader market is holding up reasonably well. But if you look at how the future is stacked up, I personally think that markets had recovered because they were oversold. All the three participants, if you look at the FII, DII, and the retail, by which I mean retail and others come as separate categories, which is corporates, HUFs, and stuff. All these three categories, if you dissect them in terms of demand and supply, because markets are operating in a demand supply forces because there are no corporate results. So coming back, FIIs have reduced their selling already. That implies that they've already sold what they had to sell in anticipation of the bad global news, which is trickling down for the last 3-4 months. So 78,000 in Jan, 40,000 crores in Feb. So far in March, they're about 15-16,000 crores negative only. And on the future side, also they've short enough. They've gone to almost 85% short and 15 long. Now that because of some short squeeze, they've come to almost 63%, 64% short and 36% long. To cut the long story short, so I personally think we are in an oversold territory. I don't think large falls are possible or imminent unless there's some fresh round of news and in turn some selling possible on the domestic side. I don't see too much pain left in the market, even from a short-term standpoint.
Sure, not too much pain left in the market, and that's sounding like music to the ears. But since we are talking about Trump, just want to ask you one question. Every other day, there seems to be some headline coming out of US in terms of tariffs, right? And now the latest one being we will be very lenient with reciprocal tariffs. Would you expect leniency, or would you expect some bit of a higher tariff for India? I mean, how do we, from the Indian standpoint, look at this deadline? How fearful should one really be?
I personally think they shouldn't be fearful at all. If you dissect all what Trump says and what he does a lot lesser in terms of harshness when it comes to economic policies as much as he speaks. So he's a very good negotiator, I would say. So I personally don't think it is going to be an event which you will even have to speak about in 2 months from now. So point one. Point two, anything material cannot change unless some larger sectors with heavy weights can get impacted. You see banking sectors independent of any of the global news, and I think they're more domestic driven in terms of delinquency rates, and the global economy doing well is when their NPAs are in control, their NIMs are okay. So I think 27% is banking, and that's at the 2 sigma lower than its mean and median P's for the last 10 years. So that implies that there is going to be buoyancy because the largest sectors is not overvalued. Then third point is, if you look at the extreme sectors which have delivered almost 41% negative growth in EPS, which is the oil and gas, it had delivered the Nifty oil and gas sector had delivered 930 rupees earnings in the same 9-month period, and this year they've delivered only 546.6. That implies a 41% degrowth. That's not a heavy weight. And on the other side, the capital market index has delivered 40% growth in the first 9 months vis-a-vis the same period last year. Both these sectors which are operating at extremes are not heavyweight sectors. So I personally think the market swinging has not been too much. If you look at this financial year, people keep speaking about volatility, and I don't know where this fear comes from. The highest level of Nifty is 26,200. The lowest is 21,885 on a closing basis. This is the tightest range a largest index of a country can operate.
Sure, but I just want to point out some data. New SIP registrations have dropped. There's been some signs of slowdown in equity mutual fund flows as well. Would you say that this was temporary, and now here on, since we've seen a good recovery, this will change?
Yes, some degree of SIP churning has happened. If you look at what has happened is SIP closures are high, gross is also high. So net is a little dampened, I agreed, point one. Point two, if you look at the SIP absolute number of 26,000 crores holding up, that's a great sign. I think Indian retail has been far sharper, far smarter in terms of controlling their emotions than HNIs. If I was speaking to, in fact, I was speaking to some very large asset management company AMCs who were traveling with us for one of our offsites, and everybody was telling me that HNI redemptions still came in Jan and Feb, but retail redemptions didn't show up. That's point three. Point four, if you look at the small cap inflows, which is a great barometer of a sentiment of a larger Indian household, we got 3,700 crores of positive inflow in February, which shocked me because that could have also been a minus 20,000 crore number, but it was a positive 3,700 crore number, which was the third highest for the financial year, in spite of the super dip of Jan and Feb in the small cap space. And yesterday's number, day before yesterday's number, which we track algorithmically, was a 220 crore positive in the small cap space. So I personally think Indian retail has acted far more sharply, controlling their recency bias and emotional drain which markets corrections bring to one's mind.
Sure. Feroze, couple of more questions then. What do you do with defense now? There's, a spate of good news surrounding defense names. Of course, there's been the 54,000 crore rupee nod from the, Defense Acquisition Council. Of course, European companies also ramping up their defense spending, so that would translate into more business for Indian players as well. And we've seen a good resurgence in some of these names. What are your thoughts now on defense? Because they've also seen a fair bit of correction. So now, do you think it's a good time to look at these stocks from a portfolio standpoint?
Yes, Nandita. See, what is the attribute of defense is defense as a sector works more on information than earnings. That's the reality. It goes ahead of earnings or it lags behind earnings. So when you're playing defense as a sector, which is a high beta sector, what you have to keep in mind is if there is a series of good news coming in, you have to have lower free float stocks. If there is a series of bad news coming in, you have to have higher free float stocks. So that's the strategy you'll have to play on the defense as a sector. That's point one. Point two, I personally think defense in certain pockets has created some degree of good valuation, especially the higher free float stocks have corrected reasonable and they've not rallied back up with some degree of positive news. And that's so you have to be very selective is the net point I'm trying to make in defense as a sector.
And what do you do with autos now with this tariff announcement? Autos already have not participated in the up move that we have seen in the market recently. Would you avoid autos now completely?
No, I think I will not avoid autos. It depends on my time frames. See, if there is, my time frame is 3 months, then definitely you have to avoid auto. If you're looking at sectors from a perspective of owning them as direct equity or mutual funds from a 1-2 year perspective, then auto is a great sector because it delivered 9.1% earning for the first 9 months, and it has not participated in the rally. So I personally think large cap auto names have merit, and I think they've been beaten down, and there is reasonable pessimism priced in already. So from a 1 year standpoint, auto would be a good pick because the last quarter results are also expected to be good, and a 12-13% growth for the full year is possible in the Nifty auto index. So I would say 1 year auto is definitely a pick.
Okay, auto is definitely a pick with a 1 year time horizon. But with that, Feroze, I'm afraid we are running out of time. Would like to thank you for taking our time and joining in. I wish to have more conversations with you in the future and longer ones at that. But for now, would like to thank you for joining in this morning.
Thank you, Nandita.
Thanks a lot. With that, taking a look at the market then, 23,500, we are being able to hold on to that level and we have recovered smartly from the opening lows as well. So, looks like the auto news has been digested well by the market, but not by the auto stocks, of course, because Tata Motors is the top Nifty laggard, a 6% cut coming in in the wake of the tariff announcement by the President of the United States. But to understand the implications of a 25% tariff on auto imports and how it really translates into for Indian stocks, I have with me Nirav Karkera, Head of Research at FISDM. Nirav, lovely to have you on the show and thanks a lot for agreeing to join us at such a short notice. First of all, we are seeing a knee-jerk reaction on stocks like Tata Motors, Eicher Motors as well. Let me come to straight to the point. How will this 25% tariff impact JLR's profitability and pricing strategy, given its significant exposure to the American market?
So Nandita, like you rightly said, JLR is the star of the moment. All eyes on JLR right now amidst the 25%, tariff that has been introduced. And there's a reason for it. JLR as a segment, if you look at it, it derives around a third of its total sales from North America. In fact, last year, a little bit over a fifth was derived out of US alone in terms of contribution to overall revenue. So US is indeed a very, very significant market for JLR. Now, the way things stand, JLR has hardly a few options in front of them to ensure that they're able to sustain their margin growth and meet the guidance that they had, outlined in the year previously. So, a couple of those measures would definitely include a price hike. That is number one. Number two, they would have to focus a whole lot more on developing more cost efficiencies. However, this is not going to happen overnight. It's not as if you can
Hmm.
expand your presence in a foreign country and start, manufacturing in a big way, overnight, right? It's going to take some time. It's not going to happen
Hmm.
instantaneously. In fact, there is a near term adverse impact that is expected on not just JLR's bottom line, but also its revenues, considering that the 25% tariff is quite steep. So, with limited ability to pass on the increased, cost, especially also of the components on which the same tariffs have been extended, JLR may not be able to achieve a very efficient pricing strategy that hits a equilibrium with the customers. So it can see a drop in demand in the near term, and that will eventually translate to, some pressure on the bottom line.
Hmm. Pressure on the bottom line, of course, Tata Motors staring at that. But, from a stock price standpoint, we're very close to 52-week lows. The stock has already seen a fair bit of badgering. Do you think, a floor has been set when it comes to the stock price, or would you expect more correction from here?
So, sans today's announcements around the tariff, it of course seemed to be very close to the floor. In fact, most guidance looking
Hmm.
forward has been rather upbeat. The outlook has been positive for Tata Motors as a business largely. However, there will have to be some more adjustments and moderations that need to be penciled in on account of these newer tariffs, right? So I would say that
Hmm.
considering, a back of the envelope calculation shows that, we may be closer to the floor, but, there may be some more pain before things get better for Tata Motors, especially on in terms of all the dependence that it has on JLR revenues. Of course, it's just the US market that is, causing a dent. So, we are thinking about a quarter of JLR revenues being impacted, but JLR as a percentage of total Tata Motors revenue brings it down to a much lower impact. However, this definitely, warrants an increase in the margin of safety required for, being comfortable with the price in Tata Motors. So right now, the way things stand, we are getting closer to the floor, but we will need a whole lot more conviction in terms of positive triggers and green shoots of, recovery in the
Hmm.
financial performance before we can very strongly commit to long on Tata Motors.
Okay. What about Aisha, Nirav? The US is a major export market for Royal Enfield's 650cc motorcycles as well. How do you really look at Aisha Motors after this development?
So life is going to be tough for the Royal Enfield segment, definitely. Like you rightly said, 650cc is the flagship product that is being heavily exported into the US, and there's a lot of dependence on that. However, having said that, this particular model and the revenues accrued on account of it, as a percentage of the larger scheme of things, may not be too large to worry about immediately. And in fact, it's not as if that the sales are just going to stop, considering that it's a lower ticket size and the tariff percentage impact is going to be, relatively lower versus the other big ticket motor sales, right? And the segment to which it is being sold is largely, price, I won't say insensitive, but less price sensitive consumer segment that it is being sold to. So not expecting a very very steep decline in demand on account of the tariffs right there. And even if you look at the contribution to overall revenue and you look at the domestic demand for Eicher Motor products across the spectrum, not just the 650cc motorcycle, but the entire range of vehicles that Eicher Motors has been producing, we believe that there will be small and near-term impact. However, it's not going to be as large as probably what we discussed for Tata Motors a while back.
Okay. What about the auto part makers? Global automakers are expected to pass on the cost increases. How severe could the margin pressure be? For the likes of Sona BLW, Samvardhana Motherson, they are already under pressure in today's session, of course, reacting to this news flow. But how would you see the future trajectory for these stocks?
So one thing is very clear that component makers are going to be under a lot of heat. Right, life is not going to be easy from here on for them, because definitely there's going to be margin pressure. In fact, you spoke about a couple of them. Samvardhana. You spoke about Sona, right? So if we were to use those as examples, if we talk about Sona Precision very specifically, it has a huge dependence on the US markets, right? It is almost two-thirds of its total revenues comes from is accrued on account of exports made to the US, which makes it a very, very significant market for Sona. So definitely, the tariff is going to have a direct hit and direct impact on Sona BLW. However, the case may not be the same for all component makers. For instance, another name that you spoke about was Samvardhana. Now, the case for Samvardhana is slightly better over here because it already has reasonably strong presence in the US and Europe. Of course, it's not going to be cakewalk to set up facilities and expand facilities in the US overnight, but it at least has the inroads that puts it in a better position to significantly insulate against all the headwinds that this tariff is going to bring along with it, right? So the case for auto component makers largely is a difficult case, a challenging scenario. However, there are a few who have the ability to insulate at least to a decent extent against the headwinds that come their way.
All right, that's the view then and on auto part makers. But last question really, Nirav, for FY26 in particular, since we are at the threshold of the earning season anyway, how is it looking like for the auto pack as a whole?
See, the auto pack seems to be facing many challenges. It's not as if it is out of the woods yet. But one thing moving positively for it is that everything negative has been very strongly priced in already. Most earning downgrades are already in place. So any negative news flow coming in may have very limited impact on the downside from here on. I believe we are less vulnerable to the downside than we are exposed to upside risks at this point in time, or upside surprises rather. So of course domestic consumption is plateauing. Urban consumption is slightly challenging at this moment as we speak. However, rural consumption is picking up. We can expect two-wheeler commercial vehicle sales to offset a lot of decline or plateauing that we'll witness on the PV side of life, right, on the passenger vehicle side. So net, we feel that the auto segment is at crossroads right now. We are looking for reasons to believe in a steep recovery, but the way life stands right now, it would be a plateauing year, just continuing and extrapolating the trend of the previous year, probably with some flashes and signs of positivity. So there would be a positive bias, but it is it is a matter of time that comes into full effect and force. It's not going to happen from the get-go of the next fiscal.
Sure. In the interim, of course, it is looking like a challenging road ahead for autos. But with that, Nirav, thanks a lot for taking our time and joining in and putting things into perspective for us. Always appreciate you joining in, and this time, of course, at a very short notice. So I appreciate that as well. Thank you. Thank you so much.
Likewise. Thank you, Nandita.
Thanks a lot. Well, that was Nirav Karkera on the implications of the 25% auto import tariff that US has announced. But with that, of course, we've come to the end of this edition of Opening Bell. But from the market, for the market movement right now, we are above that 23,550 level. We have done well to come off the opening lows. The mid cap index as well has edged back into the green territory. The bank Nifty is showing strength, almost almost a percent higher on the Nifty bank index, 350 point up move. So yes, autos of course are in a spot of bother, with the likes of Tata Motors losing somewhere around 6%, even the auto component makers under pressure. But as a whole, the markets have really digested this tariff news pretty well. Let's hope this momentum continues, but some bit of volatility can be expected, because we are, of course, it's the monthly expiry day, but nevertheless for the March series, we are up somewhere around 4% or thereabouts for the Nifty. But with that, thank you for tuning in. Stay tuned to Money Control for all your other news and updates, and I'll see you in the markets at 3:30 p.m. Don't forget to tune in.